Welcome to TradeTheMBI.com. This is John. This report is for the 3rd. And, well, we got the push back up to the previous highs. We're just about there from the end of year kind of shake-off move that caused the extreme move on the DOC. We're still in a DOC spread in the form of short weakness, but it was the reset of the steel, and immediately it moved above the negative 13.5 yesterday. That started the move right back above the ABM yellow. We weren't looking for anything significant other than at the most a retest down to the ABM green levels down in the 50 something range. 59, I thought maybe 55 was a possibility if things continued with any softness, but we didn't dip below the red line at all. So we're still softening on our shakeout, so that's going to be a complete reset. The key here is to see that we don't dip below zero. Looks like things are stabilized okay for the beginning of it, but I don't think that there's anything wrong with when you see weakness within the move, taking advantage of it. From the NQ standpoint, much stronger. You'd already had the reset of the steel, and it started pivoting at a little bit higher level. All we got was a midterm buyer dip, and what you're expecting is fund money coming in another couple of days here, and the result of that elevated price, they want to make them pay the maximum. Will they? Yeah. So the EU, believes that its inflation rate is running at a significantly higher pace than the US, and therefore it's a much better draw for higher rates of return. I think that remains to be suspect given the fact that the quantitative easing, I think the inflation that you see in Europe is a bit more artificial than real. Whereas in the US, you still have softness related to labor supply. As long as that remains flush and we haven't gotten into a squeeze mode, you're still going to have fairly decent inflation numbers, which it's okay, but the reality is with oil rising, you've got some other hidden factors that are going to start pushing things a little bit more elevated, particularly on the supply and demand side. As the economy heats up, you're going to get little bottlenecks where they're a little behind on supply, and that's going to force erratic price adjustments, and that's why I think this coming year we're going to see a lot more volatility as some of these bottlenecks have to get worked out, and we haven't seen it yet. No one's really talked about it, but this is what happens in an expansion phase. It's just an obvious. So that's a discussion for as the year goes on. We still expect TLT suffer significantly as rates expected to climb. There we go with the oil. See, it's continuing to break out subtly into new highs. This is the demand aspect. Doesn't matter. There's going to be increases in supply, but as we end up with, like I said, some of these physical restrictions to supply issues, that you're going to see this modest increase, and this is going to get spread. There's no way around it. It gets moved through the economy, and that is where the underlying inflation, the more rapid it becomes, and it's always a trailing thing. This is showing you how rapid it's going to be and where it's going to come. We had shrunk that down to show where we were headed for the overall highs back up here for gold, and how much we had liked it all the way back down here, as well as earlier in the years going way back. So it's been a continual play. Some people have, talked about how it's slowed down. If you're playing it for fast moves, that's one thing, but as a long-term prospect, I've been advocating a solid position in gold for quite some time, and it's not changed at all. And with this most recent pop, we were expecting potentially for it to fade back into here, so we weren't looking for too much. We paused a little bit, but all we got was continuation of strength breaking into the new zones, and with the shakeout continuing to go back up, and it's just propelled from there. So once we ended up then with the cyan below red, really it's taken off since there. That's the party a little late to the trade, but even at the point where we moved to positive shakeout, was just right over here, which is not too far off the original buy setup. So you can see it's still looking pretty healthy, though overbought. So overbought from right about in this range here in the 121. So that would be a significant pullback if it happens. I don't know that it may, at least not yet. We're not seeing it. So from our 5K, we ended up with the dip. We ended up with a little bit of a pop in futures. It wasn't much, got right to the 23, but then once we were above it, it was a clean cover point. Came back up, didn't reach the 50% early because it was such a fast pop on that we reset, but quickly didn't even really go back to the ABM green or anything. It was pretty strong from a 5K standpoint, and then we propelled boom straight to the highs. We had a couple of weak points, DOC spread without the corresponding orange, and that really was an indication that we were just going to move right back up to the highs. And not only did we go to the highs, we got to the newer level. I was talking about this on the Skype chat at this particular point, that we needed to get back up to these peaks, and it was still early enough. We ended the day just shy of it, which still was pretty critical. And now, though, we have achieved the peak here in pre-market. The exact same high, 98. That corresponds to right back over here when we had the same pre-market move. Need like 1/4 tick to go back above, to be exact, but that was the kind of move that I was looking for to suggest that we're still in a continuation mode from the previous year. That brief blip down was merely about those having to close out their book and then reinitiate. Now, will funds jump into at this level? That's going to be the interesting question, because I don't know if that seems attractive to them. The numbers going forward for me, if you get past, 27.25 or 27.30, I think that you may be ahead of the game until we get some real earnings numbers. They're probably going to be decent. Is it enough to push the multiple? If we start to see inflation, then I think definitely it is. But some of it's also going to be baked into, are we going to be seeing tax reform? Beyond what we've already got, some of the additional items like infrastructure spending, that kind of thing, to really propel the next wave, so to speak. And so we have to determine whether that's going to take place or not. As it is right now, still looking green, and until that changes, we just got to go with it. However, I do think that given the elevation on this, that there are a few opportunities for resets that will bring us back into the 50% mode. So as we get the rising lows, we still have rising highs. Once those highs flatten out, then I think we'll be looking for it. Now that's all the way up to 26.90 now, so significant move. As always, though, I will post charts as they're relevant on the Skype chat. Trade well.